After last week's fears of Bitcoin crashing below 25,000, even potentially taking out the cycle low, Bitcoin has managed to close back in the trading range. So this naturally leads to a lot of uncertainty amongst investors. Is the bull market back on? Are we getting ready to crash to a new bear market low after a potential bear market rally? They're the questions I want to answer in today's video, and potentially how long this could take, what to expect from it, and how to best profit from it, just like we have been doing from the bottom up to this level right now. So make sure you hit that like button, subscribe to the channel so you don't miss any of the macro content, along with the stock markets, the real estate markets. Everything here is part of a holistic trading plan. Guys, the link in the top of the video description gets you the free crypto and economic report, plus when we are ready to release the free trading workshops, just like a lot of our members here have been using, you'll be first to be notified by that. So make sure you use that link in the top of the video description to subscribe. Plenty of massive profits going on right now with the volatility in the market. Pepe 100%, APT going short 40%. And this is basically just an update from the last day where I showed you guys the profits that our members are making across all platforms here. Very honest profits, and some cases losses as well. So if you want to check that out, definitely go and subscribe to our free newsletter, and we'll let you know when these profits are ready to be had by you guys in our free trading workshops. So let's break down what has happened in the last week and what we can expect moving forward, potentially over the next several months. Bitcoin has broken down past 26,000. However, to the dismay of many of the bears, it has now closed back in the trading range. It closed at $26,900. If this was to be as weak as the market was hoping for, it needed to close below that trading range. So does that mean that we can't go back down there? Of course not. We could potentially trickle back down, but the idea here is, at least for the bulls, is that it maintains above $25,300 and continues to consolidate and mount an attack again eventually to break past that $31,000 or $32,000 level, which are our resistance levels above. This is the one of the major 50% levels. You can see that the top here, this was from the first lower swing top, so a very key level for Bitcoin at 48,000, all the way down to the FTX collapse low. So that is the cycle low, at least for now. At least what I'm saying is the cycle low at around $15,500. So the halfway point is a key level. You can see the market has basically run up to that and been rejected just in the last several weeks, basically back in April. So that's at around $32,000. It also lines up relatively well with the low that was set in late January. So that low is at $33,000. So there's a fair amount of overhead resistance, and these particular areas take quite some time to overcome. Once the market can overcome that, you will see many of the bears who are basically calling this a bear market rally. You will see them have to flip. Not all of them, but many of them will have to flip. The rest of them will hold on until it gets to this level, saying that's the bear market rally, and then this level, that's the bear market rally, basically saying that the market will come up to test that and then collapse. Or they'll wait all the way to the double top and say that the market will eventually come back down and collapse past the lows. By that stage, it's probably too late to still be a bear. There's so many gains lost to the upside. So this is kind of where we see it in the mentality of the markets at the moment, which is of course bringing the uncertainty amongst investors. Is this a bear market rally? Is it the start of a bull market? That's stage one that I've been talking about, where the market is still trying to decide, is it the beginning to the move to the upside? Are we just going to collapse again? And that is typical. It is characteristic of the beginning of every single bull market. Now, many expect a bull market to basically just be this blow off top. Now, I had a discussion about this on Twitter recently, so make sure you do go over and follow over on Twitter, specifically talking about how this is the retail blow off top. Retail comes in late. Even institutions, call it dumb money, call it whatever you want. These moves where it happens fast and hard, that is the late part. That is the scary part. But many see that as being the exciting part, the safe part. That's when the sheep all come. That's why the price moves up fast and pretty quick, in pretty big gains. That is when the sheep come. The sheep are not here at these lower levels. So we're seeing many characteristics of what we're going through now, you see many characteristics of what has happened in the past. You can see 2019 into 2020. We can see all the way back in 2015 into 2016. It's the same sort of thing. The bulls, or at least the early bulls, were saying this is the start of a new market. The bears are saying, just wait, it's a bear market rally. It's a bear market rally. It's a bear market rally. You can see in 2016 how key this was. Just exactly what I've been talking about with 2023 into 2024, potentially moving to higher prices. You can see how the market climbed out of these accumulation zones. Let's take these off so it's cleaner. And then it got rejected at that first significant resistance. However, the market held up, reaccumulated, and broke out. Then it came up to test the next resistance levels. It accumulated, reaccumulated, and then broke out again. And then you still had the bears calling it, it's over, this is it, you've reached a double top, Bitcoin will never be X amount again above. This time, Bitcoin was at $1,200 per BTC. You can see the rejection points, but they were shorter and shorter on the way up. So that's a very key characteristic of what I anticipate happening over 2023, 2024, as the market reaccumulates to break to new levels. It's a key characteristic. And as the market goes on, you can see these moves happen faster and faster. It happens every single time. The break, the move out, the break, and the break, and then eventually you get the fall. It's happened in the previous cycle. So basically just going back to have a look at how this forms and how the market sentiment behaves at around these key levels in the market. You can see the fall here in 2011, basically when no one knew what Bitcoin was. It's the same characteristics. Never is this time different because humans all have the same emotions, no matter if there's 10 people trading in Bitcoin or 10 million people trading in Bitcoin. It's the same characteristics. You can see here, the market rose up, got rejected, accumulated, or in this case, reaccumulated, then broke out again. Look at where it got rejected, right at that first lower swing top. Reaccumulated, broke out. Same thing happened again. You can see we had the rejection, the reaccumulation here, also a more major reaccumulation after this major break, and then goes on to that final top. So that's a quick look back at how this builds up over time, which is why I'm still on the side of the bulls, that this is that first key breakout. Now, of course, I am biased to the bull side because I have to take a position when I'm trading in the market. Now, I'm a longer term trader, and so that's why I look for the longer term signals. What has happened in the past? What can I expect to happen over the next few months? Because if I don't understand what may happen, it can shake me out of the position. Now, I was reading Unknown Market Wizards, so not to go too much into this, but it's a fantastic book. If you want to learn how traders trade, what their mindsets are, which is the most important, I suggest getting Unknown Market Wizards. I was on a Twitter space with one of the people being interviewed in this book just this week. Really excellent to listen to how these guys trade and think and what they do in the markets. So this was just one little piece here that stood out to me. Your return risk performance represents one of the best track records I have ever encountered. So this is the author questioning the trader. What skills or personal qualities do you believe have enabled you to achieve these results? This one is really interesting. I'm not looking for instant gratification. This is typical of the new trader. They want instant gratification. You buy up, it booms, you make money, and you look like a legend. Think of Pepe. We just had that. They want instant gratification of instant profits. I put the work in and then wait patiently for the right trade. I can stay in a state of readiness, and when combined with in-depth research, this is my edge. So that's what I believe we're at this stage in the market. So let's take a look at that in terms of time frames themselves. We've just hit a peak that week in April of the 10th. So what I think is happening now, we've been down for 1, 2, 3, 4 weeks. We're into our 5th week now, is something potentially similar to what's happened in the past. So let's go back and have a look at how some of these accumulation ranges have basically frozen the market as we go through a potential boring period. These are going to be some of the most critical areas, and I'll explain how you can make money from them, what to do next, and what I think is coming up probably over the next sort of 3 to 6 or 7 months. It's a pretty broad period because we have just had a significant move up. Going back to 2012. So this was what I was just looking at here. The breakout to the upside. You can see the market hit, got rejected, came down for a few weeks, had that little bit of a push down, which would have been scary at the time. You can see it came back, tested the tops of the accumulation range, and then began to reaccumulate before it started to climb out. So I've measured this range. It's 27 bars. We're looking at 27 weeks here. We're on a weekly time frame. So there's the top of that range there. So what we're going to do is measure from our top eventually that we had in April, week beginning the 10th, and then measure out that period. So we had 27 weeks before we had a break of that top. Market ran out, got rejected again, and went on a 22-week reaccumulation before a breakout. So if we wanted to just measure that to the real big bar here, that's 23, but essentially 22 brings you up to about 5 months. So in this case, it was 6 months. In this case, it was 5 months before the breakout. All the while, it was still trading underneath the previous all-time high. So that's something to keep in mind as well. Moving forward, we had the next peak that happened in April, basically dead on 10 years ago. There was another top in the market. It went sideways. It lasted 6 months before it broke out of that first lower swing top. If you wanted to measure this to the previous top here where the closes were, so that was the highest closing week, then you got 28 weeks, so just over 6 months. So either way, approximately 6 weeks. Then we got a breakout of those swing tops, and the market went on to that final peak that happened in November. Moving forward to 2015, where we had the accumulation bottom. So this is right around that low. You had the pump up from the first low, 23 weeks. We had that rejection, and then the market went down, eventually breaking out. I'm measuring this period here because it's showing us a cyclical pattern that Bitcoin continues to throw at us. Lower 20s, higher 20s, somewhere around that 5 to 7 or so months that it has to go on these reaccumulation periods, basically a time where the price stops. Investors are uncertain, or basically they're just waiting to see what happens next, which essentially is uncertainty. But what we can do within that period is, of course, start to layer into a bigger position if we see the signals are meeting our own trading plan. And what I like here is that we had all of the support holding. We had slightly higher lows forming. This didn't show up on all markets. We're looking at the index chart here. So on many of the other exchanges, this actually didn't happen. But nonetheless, you got a nice big support here at around $200. Moving forward, same sort of thing happened. 29 weeks. We had that big pump out of the accumulation. And then this is basically where I think we're at right now. We had the reaccumulation, 29 bars, finally got the breakout. It went up again. That's what we were looking at, where the market was rejected. It went for another 27 weeks. Can you start to see the pattern here? Very much in that mid-20s. Doesn't have to be dead on 27 every time. There's going to be that slight variance. Of course, we're looking at longer term timeframes here. And you can see from this point, 27 weeks, market eventually broke out, came back, tested those tops on a wick, tried again, tested those tops again, and then broke out from that point. So one of the other questions I had here before we have a look at a few of those other areas is, how long would this last? So what's happening? Well, we're potentially going through a reaccumulation zone here. Provided we remain above those candle bodies, we can have some wicks down like we've seen before, but we want to see closes above this 24 to 25K level. We don't want to see the market break down from that point and then start to consolidate under that level. That is the case where the bears start to take over. That's the case where the structure changes and we have to change with the structure. But for now, I don't see the structure changing just yet. I see the structure remaining with the bulls. So I go back to this particular quote here. I'm not looking for instant gratification. I put in the work and I wait patiently for the right trades. So I'm a longer term trader. That's why I'm still on the bull side, because I haven't seen the structure break. We saw the bearish structure break to the upside right here in January. We saw the bearish structure break again as it took out 22K. We saw the bearish structure continue to get destroyed as we had the banking crisis low, and it rebounded relatively fast, or very, very fast, on strong volume. Then we saw the 25K break. That just continued to break down the bears. It broke here, it broke here, it broke here, it broke here, it broke here. There is a lot of breaking of the bears. So the last thing they have are these overhead resistance levels. So provided this bullish structure remains, we remain above these levels, we continue to consolidate, potentially over a very long period of time, what many would consider a very long period of time, this next sort of 3 to 7 or so months, then we mount the attack to the upside. We attack that $30,000, $31,000, $32,000 level and maybe get rejected again, go through that sideways accumulation, and so on and so forth. This is probably going to be the rest of 2023, and then we'll start to see what happens in 2024. So that's how long it will last. What can you do during this time? Well, what would you have done during the other times? I probably would have been looking at ways to accumulate my positions, whether it's Bitcoin, whether it's ETH, whether it's some other altcoin that I think is going to make it in the next cycle. We haven't seen altcoins in many cases collapse far enough, but we're going to see some good ones that survive out of the ashes of the aftermath of 2021. So for me, I'm still looking at the BTCs and the ETHs, and I'll just be looking to add to the positions as I start to see some of these swing tops break, or at least higher swing lows begin to form, keeping my stops nice and close in case the bullish structure breaks down and we go back into a bearish structure. So does it end? What are some signs of it ending and signs of it accelerating? Do we start to see the market accelerate? Now, quick reminder, hit that subscribe and like the video up as well. As I mentioned earlier, this is stuff that we talk about with our members in the Investor Accelerator Premium. And also, if you want to be part of the free trading workshops, link in the top of the video description here for tiacrypto.com/subscribe. This is where these guys are making 600% returns on their Peppy trades, 100%, 194, 185, some huge returns here using trading strategies that work. So go and check that out. Link top of the video description, join the email list, and you'll get notified when these trading strategies, these trading workshops are available for you guys. 2019, 2020, and 2021 are pretty good examples of the broad range of what potentially can happen next. 2019, again, we had 26 bars, so 26 weeks, where it was basically this capitulation into that 3-4 month accumulation, and then the market started to break out again back to these highs. So a nice 6-month move down and then all the way back up to the exact same point. 40 weeks is the longest one that I have seen here. Basically, there was a longer period if you want to take the top to the breakout point. That's 71 weeks. So this is one of those times that was out of the ordinary. It's a black swan event. Nonetheless, when I'm looking at these tops, basically the move here at about 10,500, you can see to the breakout was about 40 or so bars. So even within that period, there are still times where you can see the pattern form, the resistance, then you can see it consolidate and then break out. So it was longer than these periods, but remember, this is the market. It's not going to be exactly the same. You just want to look for the patterns themselves. Some resistance, consolidation, yes, black swan, all the way back up in to the trading range, a breakout, hold above, and away we go. And then each of those moves became shorter and shorter. We got rejected. It was down here only for several weeks, back up again, only 1 or 2 weeks, back up again, only a few weeks, and eventually that was the peak there. So we look at the top here now, April, which is basically a 2-year anniversary to the current top that we just had in April. We had 27 weeks until the market tested the new high price. Another couple of weeks under, another test, and then of course the fail from that point. So 27 weeks of the same sort of thing. Basically, what we've found here is that there is a very simple pattern of approximately 22 to 29 weeks where the market hits resistance, finds its way, finds its support level again, finds some accumulation, and then attempts to break out. In most cases, it has broken out because it has been underneath those all-time highs at the beginning of a bull market after that old 4-year journey from bottom to bottom. The only time that it failed was at the peak. And I think most of us can understand that this is not the peak right now. And the final one here is also 26 weeks. It's funny that these patterns continue to repeat. There's 26 weeks, dead on 6 months. There is your top in August, next top in February. Let's extend it out to where it actually broke out. So this was the first test, happened at 26 weeks, and then it broke out at 30 weeks. So that was an extension of the timeframes we've looked at, but nonetheless, we've also seen a repeat of those same sort of timeframes around that 6-month period. So to today, signs that the market is ending. We've looked at that, looked at those higher lows, what can we do about it, and also looked at those signs of the acceleration. Basically, the market staying underneath these levels for less and less time, similar to what happened in 2016, 2017. I'm saying similar because none of these things repeat exactly. And yes, people are going to say, well, this time's going to be different. I agree. It's going to be different, but it's going to rhyme. So we're going to need to keep in mind the timeframes themselves and what these patterns look like, especially when they start to break out. So let's have a look at the potential of these patterns breaking out. This is the trading zone that we're currently in. Let's have a look at this in terms of timeframes from the top. So measuring from the shortest time frame that we have to work with, 22 bars. That takes us out to September. So basically, as summer ends, moving into that autumn period, that September 2023, 22 bars. To the extreme end of it, 30 bars is basically what we've just seen here. That's going to take us out to about November. So that almost falls in line with the old sell in May, go away. But what we had looked at with those videos is that we could potentially see the price slightly higher by the time it's time to buy again at the end of October for that 6-month sell in May, go away period. So the shortest period, again, it was around that sort of 22 bars, 21, 22, taking us to early September, all the way out to 26, 27, which is October, all the way down to 30 as well into November. So let's expect something around September, October, November for the markets to get a little more exciting. Probably we'll see some boringness now, June, July, August. There's going to be some flurry of activity, but the main activity, the main thing that we want to see is the market break above the previous resistance levels. 31K is the current top. The 50% level is 32K, and these previous lows here are at 33K. There's also a major 50% level from the top at 69K to 0, which is $34,500. So there's plenty of resistance, 31, 32, 33, 34. There's a lot overhead. What we want to see in this period, or as we start to get towards the end of the period, is the market break out of those zones and hold above it. And I posted those zones on Twitter just last week. You can see the tops here forming at around 28K and the next tops at around those mid 30 levels. I'm looking at this as a crossing of the 2-year river, meaning that the prices were put in 2021, again in mid 2021, touched it in early 2022, sat there in mid 2022, and it looks like we're attempting to get back above that, basically trying to cross this river of resistance and make it become support. So hit that like and subscribe. Don't go anywhere. Plenty of macro stuff coming up, and I do have a real estate video coming up as well. So don't go anywhere. Check out the link in the top of the video description if you guys want to be notified when our next free trading workshops come up. And to get us up to date, thank you very much to all of our members who are posting here. Massive, massive profits, 500% here, 22%, 47, 191%. You guys are doing fantastically well. And as I've said, plenty of honesty here too, showing some of their losses as well. Thanks again, guys. I'll see you at the next video. Like, subscribe. Until then, peace out.